Hey, good morning. Brian Hoops here with Midwest Market Solutions. This is Market Insider TV, our opening commentary on Tuesday morning, September the 17th. Thanks for joining us this morning. If you're watching this on YouTube, make sure you hit your subscribe button so that you will know when we post these videos, which are done every morning when we look at the markets after the overnight has closed. We look at the markets and trading day ahead, giving you news and ideas of what we can expect during the trading session. Yesterday morning, I did RFD TV at 8:15 talking about the markets. I'll post that link once they send it to me, and then for the rest of the week, I will be doing RFD on Wednesday, Thursday, and Friday mornings at 8:15 in the morning. So we'll be talking about markets, and we'll be posting here what some of our thoughts are. Let's look first at the overnight trends here. U.S. dollar index just a little bit firmer here, about a 10-point bounce. In our TV closing segment last night, we looked at some of the technical actions of these markets. Crude oil tried to rally overnight and failed at resistance and has turned back lower. Now the stock market continues to push higher. Remember, the FOMC meeting is coming up here today, tomorrow, and we expect a 0.25% rate cut from the USDA, or from the government, I should say, not the USDA, but the government is expected to give us a 0.25% rate cut. Not a half and not a 3/4 like some of the senators are asking for. Gold and silver a little bit softer here. Gold continues to push higher. Yesterday, new contract highs. And in the grains, we're 1/2 cent higher corn. Beans up 3 3/4. And look at the wheat, 2 to 3 cents better overnight. Oats are down a couple cents after dropping sharply yesterday. So let's get into some of our news and our features here this morning as we take a look at what's on tap for Tuesday the 17th. Make sure you follow us on Twitter at Midwest Markets and at Brian Hoops for latest market information. All right, first look at the weather here this morning, and you can see there are a lot of rain showers in the 7-day outlook going to hit Iowa. This is Nebraska, Minnesota, South Dakota, and then you have more rain showers coming in through Montana and Canada in here. So could disrupt some of the late spring wheat harvest. North Dakota could get a little bit of moisture. They are farther ahead on they're farther behind on their spring wheat harvest. They're about 88% done. We'll look more at that in a second here. But a lot of winter wheat being seeded here in Montana areas and out into the Pacific Northwest. So there's more rain coming in. This is certainly going to disrupt harvest. There's going to be a very open week this week, active week, and then we start to get into that rain pattern in here that will disrupt corn and soybean harvest. There is also some talk about rain chances improving into parts of Brazil, and after the 1st of October, that the rainy season pattern is starting to become more on track. So yeah, we'll keep an eye on this weather, but this certainly looks like something that will disrupt harvest activity. Point of note here is November beans have traded 10.03.5 every day since October 30th, except one session. We are like a magnet tied to the 10.03 area, and that one day that we did not trade in that range was Thursday, September the 5th, if you want to look that up. But every other day, we've traded at least 10.03, and we've gone basically nowhere. If you look at moving averages, all of them are pretty much flat because of just this flat pattern. So if you're buying puts, selling calls, your time decay is running here out on those. And if you're short options, that's what you ideally want. But I think you're looking at, okay, we're consolidating, but then that will lead to a bigger move here very soon. NOPA crush report came out yesterday, and August crush came in well below trade estimates, only 158 million bushels. Trade was expected 171. Last month we were about 183. So August crush was the lowest in 35 months, and even more impressively, it was the lowest for the month of August in 7 years. A lot of times we will see plants take some downtime for maintenance during August, September, and obviously that's what they're doing, but it's not real bullish for soybean meal, which was down in the overnight just fractionally. Corn harvest 9% done. Last year we were 8%, average is 6%, so we're just a little bit ahead of normal. Biggest harvest states are Missouri and Kansas. They're 25, 26 done at this point in time. Soybean harvest 6% complete, and average is 3%. So again, a little bit running ahead here. A lot of the fringe states are just getting done. Just not enough harvest done in some of the main areas to create a lot of this harvest pressure. Should mention here in Missouri, we've heard yields of 260 to 270 in central Missouri. That'd be dryland corn. Irrigated corn in southwest Missouri, maybe 300 bushels. It's just ridiculous, some of these yields that are coming in. Not all of them are this big, of course. Some of them are a little bit disappointing, but southern Illinois, southern Indiana looks to be very large yields as well. Spring wheat harvest advanced to 92% complete. Winter wheat seedings are now 14% done. That's right in line with normal. As I mentioned, North Dakota is 88% done. That's kind of the laggard as far as the spring wheat belt. Coming up this Friday, USDA will release the cattle on feed report, and it's expected to show on-feed supplies 100.9% from last year, placements at 98.6, markings at 96.6. Overall, looks to be a somewhat friendly report with smaller placement numbers, and the on-feed supplies not jumping considerably over year-ago levels. So we may get the market that's trying to find its bottom and having a tough time. Cutout values are struggling in here, and ground beef has dropped sharply. That's going to hurt the cutouts, and it's going to keep these cutout values from advancing. And even though packer margin's in the black, they're not really willing to share too much with that with the cattle owner at this point in time. Show list this week, down 4,800 head for a total of 235,900 head. Looks to be somewhat supportive of the cash markets. I think we're looking at steady cash trade this week. And if it's a surprise, I think it's to the upside, not to the downside. I'm going to sign off, but wish you a great day of trade. Good luck, and subscribe to our YouTube channel for latest videos, and have a good day.